We've got a full FarrCast for you this week, with special guest Joshua Huminski updating us on the progress, and lack of progress, in Ukraine. Dan Mahaffee comes to us with more on Venezuela, and we kick off with Jim Iuorio on the market. It's time for the FarrCast, check up from the neck up, and now here's your host, Michael Farr.
Welcome to the FarrCast. I am Michael Farr. Thanks so much for joining us again this week. It is the 5th day of December as we're recording here. Friday, the 5th day of December, last month of the year. Here we go, getting ready to say goodbye to 2025. What? Really? Is that what's happening? And this is it? And that was that? Wow. Now, maybe that's just an age thing, folks, but I bet I'm not alone in feeling that way. Markets have rebounded. I did an interview earlier this week. Actually, I did it yesterday, I think, with Reuters. And they said, they always ask the same questions, by the way. When the press call to do these articles, it's same question. So what's going on with markets? And what do you think? It's the same 4 questions. So you get to kind of say whatever you want. Yeah, I see Jim Iuorio laughing as we're getting ready to bring him on because you get the same stupid questions, and then they act very interested, and they say the follow-up is, "Oh, that's interesting. What do you mean by that?" Oh my God, what? Let me just do this and you be quiet while I give you the answers that I know you want now, 30, 40 years later. Here were the answers. Market went down sort of 5% as we got through November, and it bounced back. There. That's all you needed. Why did it bounce back? We're not really sure. We did have good earnings out of NVIDIA, and we got a couple of comments out of the New York Fed president that suggested vaguely that there might be room for further accommodation, and markets were back off to the races. So we're listening and hanging on every utterance and every sigh from whoever's on the Federal Reserve that says what we like. We've really gotten better at just ignoring the guys who say we want to be patient or we want to see more data. Just ignore them. Don't worry about those people. They don't matter. We only want to really pay attention to the guys who say what we want to hear. Hey, is that ringing somewhere else in your world? Are you listening to just the people who say what you like to hear about politics, about your hometown, about what's going on in the media? I'm sorry. I listened to my wife argue with the Today Show yesterday morning when they said something negative about a movie she liked, and she just looked up to, well, they're idiots. That was a great movie. Well, we've got to now, so many of us have a, well, they're idiots response about things before we stop and listen. Sorry, dear, I apologize, but I thought it helped me make a point. Hope you don't mind. All right. So one of the things you have to do as an investor is absolutely bite your tongue before you say, well, they're idiots. Instead of saying no, teach yourself to say, oh. You hear something that sounds idiotic to you, just say, oh. Be like the reporter who says, and what do you mean by that? Because you might hear something, you might still disagree with them, but you might catch the kernel of the argument that maybe informs more of your thinking at a later point. So, futures are up slightly this morning. We're back near those all-time highs. We fell 5%, we went back 5%, and here we are again saying the same things over and over again, waiting for a Fed meeting next week. While yields have gone down, they went down to like a 3.99 or something on the 10-year in the past week or so, now back up to a 4.11 or 4.12. You don't think that sounds like a big difference, but on Wall Street, that's a big deal. On Wall Street, that's a big deal. We care about that. Crypto has crashed. We were up at $124,000 for Bitcoin. We got down to 84, 80 something, and now we're at 91. Still not a great price. I don't know what Bitcoin's worth other than what the next guy's going to pay in the next couple of minutes. Oil has hovered below $60 a barrel. These are things I check and look at every day. I promise Jim Iuorio does too. Everybody who's done what we've done this long, you have to look at your dashboard every morning. It's just like flying an airplane. Where are we? Gold at 42.50. Tremendous returns there on precious metals. Gold's just an example. So as we come into the end of the year, I think that the Fed has a great opportunity to disappoint markets next week. They're either going to say, we're cutting rates by 1/4 of a point, and markets will get all goosey and happy about that until they read the statement, which is going to say, we're going to sit on our hands for a few months. we're not doing anything. This is not accommodation. This is not easing. This is a normalizing of rates and a normalizing of policy. And none of them are saying that they're at a neutral rate right now. None of them. They're all saying that they're too high. So that'll disappoint. Or they won't ease, and then that'll disappoint. But there's a lot coming up next week that could kill the Santa Claus rally. That's it from Farr. Be cautious, be nimble, make sure that you know why you own what you own. If you haven't rebalanced, rebalance. Follow your discipline. It will keep you safe during rough times, and you don't know when the next storm is coming. But the only thing Iuorio and I will tell you is there is another storm coming. There is. We just don't know when. So be ready all the time. Have your slicker near the door. Jim Iuorio is the voice of the Chicago Exchange and my great friend. Welcome back, Jim. Sorry for the long introduction.
No, I loved it. I loved a lot about it. And there were some things that I took out of it that I think are very, very interesting. Because if you think of what the landscape was 3 short weeks ago,
yes,
at the time, we thought the Fed wasn't going to ease the December 10th meeting. Odds had cratered to about 42%. NVIDIA was obviously stretched, as evidenced by its earnings, where it rallied 5% and then broke 10%, and its low was down 80%. And crypto was beginning a massive slide. So what's changed? Well, everything's changed. Crypto's found its footing a little bit. That's minor, very much minor. Okay. 2, the Fed's come around. Now it's 95% chance they're going to ease. And I think they have to do so to address a labor market. The only thing that's bad in the whole economy is labor. And we can get to why I think that is in a second. And then one other thing that isn't quite talked about enough is that within the AI trade, we kind of passed the torch from NVIDIA to Google with their TPU chips, which I have no idea what a TPU chip is, nor do I care. But I know that the market thought that
people are buying them, though. They're buying a lot of them.
And people are thought, well, this is a new story. And if we can focus on that story, the rotation within the trade, that's better than focusing on the, valuations are stretched, we're in a bubble, which guys like me were saying 3 weeks ago. And I still am saying it too. It's just that the minor implosion of the bubble has been pushed off. And by the way, saying it's in a bubble means absolutely nothing. What it means is sometime in the next 2 years, we can crater a little bit. That's worthless to anybody. But what I will say is this: at unfilteredinvestor.com, and our chief technical strategist, guy by the name of Mike Arnold, the main thing for portfolio construction, and you guys are going to think I'm crazy when I talk about technical analysis, because everybody who doesn't know anything about it thinks it's some sort of voodoo, but it's not. It shows sentiment and momentum. And that on the weekly charts, the S&P went into between the 8 and the 21 weekly moving averages, and then came back out of it. That to us is a sign of strength. And my target is 7,100 on the S&P. Now I can breathe. You take it over, Michael Farr.
7,100 on the S&P 500 by year end?
Yeah, well, I'd say by the first month of 2026. That's a 3% move. By year end, maybe, but I think I'd give it about a month and a half total.
Okay. So yes, we were all concerned about all of these things. And I'm going to go back to NVIDIA for just 1 second. There was also a concern, Jim, that NVIDIA was so wildly overvalued that even though there was something really great going on there, what maybe we don't really understand what is so great other than they seem to be selling a lot of stuff, the valuations were stupidly overrated and that there was no fundamental support. But that earnings suggested that there is indeed fundamental support. You got sales and top line and bottom line up 50, 60% year over year, which says, wait a minute, this is not a nothing burger company. This is not one of the dot-coms that didn't have earnings that just went the hell up because they didn't have earnings. And now, that doesn't mean that it's reasonably valued based on those earnings. It just does mean that there's some there. And when you and I look at a company like that, and hearken back with me, Jim, to 1999, and think about Amazon. And Amazon was adding 30 points a day. You had this new guy on the scene named Bezos, who was saying, earnings really don't matter. These fundamentals don't matter. What matters is the number of customers I'm adding and how much stuff I can keep shipping out the door. And Iuorio and I, even as much younger men, were saying, wait a minute. Earnings do matter, and these fundamentals matter. But you do get to a point in a growth company, in an emerging growth company, where the valuation far outstrips the fundamentals because the fundamentals are indeed so dynamic and growing at such a pace. I'm not recommending a stock here. I'm just saying that there's a stage they go through that's really dynamic, and everybody who pays a little bit more and feels stupid at the time does get rewarded, and it's terrifying, and it's never been my style. I've always let other people make that money because they always take those losses when it doesn't work, and there's a hell of a lot of the time it doesn't work. What do you think about what I'm just talking about, Jim?
So I love what you're just talking about, but think about back in 1998 up through 2001, and the thing that Jeff Bezos said about earnings not mattering. He was colossally wrong because the whole space lost 75% of its value very, very swiftly. But he was also hugely right on a much, much broader term. And as it turned out, Amazon did have the right business model. They were just wildly, wildly overvalued. And the difference between the late 90s and now, as you said, is these companies make a ton of money. That doesn't mean that the positioning can't get so stretched. Remember that the fundamental story is not what fuels the busting of the bubble. The inflation of the bubble is people just believing that this story is only one direction and everybody gets to one side of the boat. And NVIDIA baked into that story was that they were never going to have any competition, which is stupid. And as soon as there was one hint of competition from Google, all of a sudden, boom, NVIDIA loses 18% of its value and Google goes through the roof. So to me, it's not just about the fundamental story. It's about where people are positioned. And do I think that people are positioned a little too heavily in AI, particularly through like passive investing where 7 companies gobble up all those passive dollars? Yeah, I think there are things to worry about. But again, we always say, and I say this in every episode, bulls can make money, bears can make money, but pigs get slaughtered. Meaning if you get too greedy and you are just all in on these 7 stocks, there is going to be a day of reckoning. Like Michael said at the beginning of the show, it will happen. So the question is, how will you be left when that happens? Will you be in the position to pick up more of those stocks at a cheaper price? Does any of that make sense to you, Michael?
It all makes sense to me, but I want you to take a step back with me and join me here at the classroom lectern for 1 second, because I want to go back to kind of a fundamental explanation. And if I screw this up, I need you to clarify it. So here's the point, folks. If I look at a company, pick a drugstore pharmacy chain. Pick one. I don't care which one. I don't want to bash any of them. But in general, they're trading at around 12 times earnings. 12 times earnings. And on paper, the analysts will tell you that they're growing earnings at 8 or 9%. 8 or 9%. And nobody wants to pay more for them than in the stock market right now is trading at 22 times earnings. You look at another company, they can have earnings. Let's say they have earnings of $2 a share. Boom, $2 a share. And if they're growing at 8%, it means they're going to have $2.16 a share next year. And if the multiple stays the same, you would expect the stock price to go up 8% next year. That's not a bad deal, not a bad deal at all. So then you've got another company, a tech company that seems to have grown earnings at 50% year over year, and they've got $2 a share in earnings, and they think they're going to grow at 50% next year, and they're going to have $3 a share in earnings, and people are willing to pay 50 times earnings, 50 times earnings for that stock in anticipation of that continued growth at 50%. So that's part of the enthusiasm on some of these companies. Here's the final part of my lesson. If I go from $2 in earnings to $3 in earnings because I grew 50%, the next year I have to go to $4.50. The next year I have to go to $7. Now, wait a minute. How long can I keep that up? How long can I keep growing at 50%? One of my favorite exercises that I used to tell kids when I would go talk to schools in my early years. And I would go to talk to high schools and I'd say, here, try this one. Go to your grandparents and say, Mom and Dad say I have to start saving. And I don't understand. They say I should get interest at the bank. Can I deposit a penny in the bank of Nana and Pop-Pop? And would you just double it every day for 30 days? Would you double it every day for 30 days? They tell me I can learn about interest, and I'll put that money towards college. You know how much money it is after 30 days?
Like 1.2 million or something, right?
Yes.
Yes. Right.
Yes. 30 days of doubling your money. How long do you think you can increase earnings at 50%? You can't. So there is the enthusiasm stage. There is the merit in looking at a company and paying more for a company that's growing those earnings that quickly. But there's always an end that's driven by the law of big numbers.
Yeah.
If you're going to tell me that $4.6 trillion, $4.5 trillion market cap NVIDIA is going to go up 10% next year, it's $450 billion. That's the market cap of 10 other S&P 500 companies. I mean, think about the numbers that we're talking about here. It's amazing. And I'm not saying it won't happen, because it has happened.
No, it happens quite a bit. And it's so funny because what you're hitting upon is such an unbelievably powerful psychological effect. Like, people look and they look at the plow horse that you described, which is the pharmacy company that's doing just fine, making money, a good place to be. And then you look at the bullet train that's speeding away. Well, the bullet train is the place to be until it hits the wall. The plotting company and the plow horse makes money and they do a lot of work. So I think an absolute diversification between all those things, because of what you said, because the group tends to go towards that sexy name that's doubling earnings every year, but it cannot last. And that part cannot last. And then at the same time, marketing position gets so steep and so stretched that as soon as it disappoints, boom, you get it. Again, I've said it twice already. NVIDIA had an 18% decline. That's not nothing. And but the market didn't blink, which I like, by the way. I think it's because of the Google story. But yeah, that's all there.
It's all there. So you have to bring yourself back and do your checkup from the neck up and say, all right, am I getting swept away on this tide of enthusiasm by all of these folks that are, stampeding now towards the edge of the cliff? Or am I being actually driven by fundamentals and my established goals and rules for investing? I have established goals and rules for investing. I have to have them. They protect me from my emotion. They help drive me towards value. And by the way, folks, I am running so many of my thoughts through ChatGPT, through AI, through models. I'm having to do research for me. I check the research, folks, but it's fascinating how quickly I can get information now, and other points of view. And maybe it's phony, and you got to know what you're doing. But boy, is it a powerful tool to help me monitor and think about my portfolio in a very dispassionate way. And if you want to make sure it's a dispassionate way, you have to just tell the AI that you want it to be dispassionate and completely analytical. I mean, yep. Don't bring me your opinion.
Think about what you're saying here too, because AI is helping you and me as financial analysts, as wealth advisors. So this is now all of a sudden broadening out from just the AI companies benefiting from AI. And the stock trade is now the companies that are going to be using AI. And you underscore an excellent example. And banks are going to use AI. Places like Walmart, John Deere, farmers are going to use AI. And all these companies will become more valuable because of it. And that's the broadening out I see, or want to see.
I have to tell you one quick story. We got to go, and Jim's got to go. And I'm sorry, ladies and gentlemen, to add one of my far long stories. I'll try and keep this short. I walked into the bank to transfer a lot of money from one account. My father's house was sold out of the estate. I needed to put the money over in an interest-bearing account. The young lady who saw me said, "Oh, you can do that in the app." I said, "No, I can't see where I open a money market account in the app." She goes, "Oh, no, you can't open the money market account. You can transfer money. You need to talk to one of our representatives." This was a Friday at 2:00. I said, "Okay, fine." That's what I asked to do when I walked in the door. She says, "I don't have anybody available today. I will a week from today if you can come in." I said, "I'm not leaving $1 million and some odd dollars in your deposit checking account for a week. I'm the trustee. I need to do it." "Well, I don't have anybody available." "Well, there's an office about 45 minutes away, but it closes in 45 minutes. Could you do something in 3 days next?" I said, "Are you telling me you can't get anybody on the phone? This is a very well-known bank, to help me just move this." And she said, "I'm sorry, sir, I really am, but I don't have any appointments available." Poor young lady sitting at the front of the bank. I said, "Okay." I was very frustrated. I said, "Okay, thank you. I'm going to go elsewhere." "Well, when do you want your appointment?" I said, "No, I'm going to walk over to Fidelity and I'm going to deposit that. I'm going to transfer, I'm going to wire that money right over there. I've got an account over there and I'm going to do it. And they're going to take care of this for me. And you guys won't. You should tell your boss that." And as I walked into Fidelity, the first thing this lovely young lady says, "Well, you can do that on the app." And all I thought to myself in talking to these 23-year-old people was, "You dumbasses. If you keep telling me to use the app, nobody needs you. Nobody needs you. Nobody
Right.
needs to hire you to tell me to use the damned app. Come on. How's that
Amen to
helping
that.
somebody? God
Yes.
Almighty. I mean, it was incredible. So AI is helping us, but hey, folks, when somebody calls Farm Miller in Washington, guess what we do? We answer the phone by the third ring. How about that? You want an answer? You want to try it out? Call Farm Miller in Washington. See what happens.
Amen.
Uriel,
Love
you're the
every bit of it.
best. Any
Thank you.
final words from you? I love you. You're the best.
No, just stay within yourself, people. Remember, Michael said the magic word rebalances. We're getting to the end of the year. You guys remember a year ago on this show, I was talking about my rebalancing, which I didn't even want to do because I was a bull. And then I ended up buying a little bit more in April again. But again, you rebalance when you don't think you have to, because again, pigs get slaughtered.
Pigs do get slaughtered. Thank you, Jim. Coming up, ladies and gentlemen, we've got Mahaffee, and we've got my friend returning Josh Huminski. Boy, what a great FarrCast we have for you. Please stay with us.
It's time now to go to our senior political analyst, Dan Mahaffee. And now here's your host, Michael Farr.
Welcome back to the FarrCast. I'm Michael Farr. It is the 5th day of December. Rolling into year end here. Lots going on as we cover Wall Street, Washington, and the world. Iuorio, that was interesting. I worry, Harry, sometimes when I think it's interesting after I've done a lot more talking than I normally do. That's just probably, pure hubris on ego on my part. But I hope it was interesting for you. We tried to provide some insights there, and it wasn't too much far. All right. We won't get too much far as we talk to Dan Mahaffee this morning, I promise. I do want to share with you, we got two notes this past week about our segment with Daryl Owen. One was both from long-term listeners. One said, "Hi, Michael, I just listened to your recent podcast. It was excellent as always." Thank you very much. How do we get Daryl Owen to run for office? So insightful, learned so much. He really seems to get it. Thank you. Happy Thanksgiving. Then we got another one and said, as you cover Wall Street, Washington, and the world, I was listening to the Daryl Owen segment. I typically don't like criticizing. I value the FarrCast, but really didn't like that segment, and it was depressing to me. Sorry. And that was from my friend Bill in Cleveland, who's been a listener for 7 years, and we've talked about Bill before. Wonderful. I'm sorry, Bill. I always hate to cross a line that makes anybody too uncomfortable. I probably got too deeply into it with Daryl, but as a long-term Washington insider, if it was depressing, it's because that's, I think, the way it genuinely, truly feels in Washington. That's you're not walking away with an isolated, oh, these guys really made me feel, this is a real bummer about Washington in that segment. I think that was a pretty good reflection. I think he was candid and transparent. So I'll try not to take us too far down negative pathways. But Washington has changed. I was born in Georgetown University Hospital. My father was born at Sibley Hospital. My grandparents and great-grandparents were born in Washington. I've watched this for a long time. It's not felt like this. This is very, very different what's going on there now. And it does inform policy and what future policy is going to be and how that future policy will affect the tax base, the spending base, what goes on at the Fed, policies on Wall Street, all the way down the line. So, Bill, please keep listening. Please don't throw us overboard, and I'll try and keep it as down the middle as I can. This is a tough time. It's been a tough time in Washington. All right. When we really need to go to Washington, we go to Dan Mahaffee, who is the president of the Dr. Scholl Foundation, scholar at the Center for the Presidency, Study of the Presidency in Congress, and the senior political analyst now on season 9 in the FarrCast. Dan, welcome.
Thank you, Michael. Great to be talking to you as always.
Good to be talking to you. Dan, we have the narco boat blow up Hegseth Gate going on. Ever since Richard Nixon, we just add a gate to everything whenever it seems like it's going to be controversial or a cover up or somebody's going to start really losing their job over something. Hegseth lose his job over this?
I doubt it, unless you really see a push from Congress, but I don't think anyone in Congress, as we've looked at this now, is breaking party lines. You've had the hearings on this, and frankly, if there is a lesson the administration took from the first term, it was to really cut back on the cabinet turnover, to not have the various, former cabinet members out and about sharing their perspectives and others, going back to the old Washington phrase about keeping them in the tent rather than out. So that definitely, I don't think they want to push Hegseth out. And also, I don't think they want to do it at a time when, frankly, they're seeing themselves as doing the right thing, targeting these boats, that they're stopping the flow of these dangerous drugs, that they're keeping the country safe, and that they're not going to stop while politicians and political types stop them from keeping the country safe. And that's what they'll see, and they see Hegseth as doing his job and doing it well.
Insider anecdote that may or may not mean anything from this particular born native Washingtonian. I am involved with a couple of big dinners in Washington in the first quarter coming up here. Lots of muckety mucks will attend each, lots of muckety mucks. And I was talking with two very highly placed, highly regarded insider access people about the dais at this one particular dinner. And Hegseth's name came up for the dais, and as soon as one of them mentioned it, the other one said he isn't going to be in office by then. And the other one agreed, said, yeah, scratch him. By the way, that is the conversation that happens behind the scenes in DC. That's how you know when you're on the list or not on the list, whether you get invited to the dinners and asked to sit on the dais. Scratch him. He isn't going to be around by then. Let's figure out who's going to go, So not everybody agrees with you, but, a week or two can be forever in politics. And that was 2 weeks ago. So maybe things have changed.
That is,
George,
Michael, and it's of course always interesting Kremlinology, but I think what matters most is where the president's confidence is, and I have not seen that break yet in Secretary Hegseth.
I agree with that. The president's been very consistent, at least in his public support
Yes.
of the secretary. So,
And look, as we've known too, that the president is not shy about letting his displeasure be known with members of his administration in public as well.
or anybody else.
Yeah. So,
Right, or anybody else. Okay, so Dan, we have the drug boat gate going on. I read George Will's column that condemned the sinking of this boat after it had been sunk, and then having these two survivors killed. And now we've heard congressional testimony and other things suggesting that, in fact, they were turning the boat back over. They wanted to start the boat. They wanted to resume the drug trade. They were still taking aggressive actions, and that this was all justifiable. Can you give us a down the middle sort of view of what happened here? And if you don't have an opinion, can you tell us what's at stake and what the rule of law says so we can better understand it?
yeah, well, Michael, look, we know from the war on terror, other things like that, strikes like this that took place throughout that there are times, yes, you've had double strikes, double taps as they're referred to, follow-up strikes, to make sure that you've hit a target and eliminated all the hostiles therein. But that is the war on terror, and that was justified and legally approved by Congress in authorizations for use of military force. Now with narco trafficking, or narco terrorism, as the administration is now phrasing it, which is a relatively new term to tie narco trafficking to
Yeah, I've not
terrorism.
heard that. I mean, yeah, I'm glad you said that. Narco terrorism is a new turn of phrase, isn't it?
Yeah, look, and when it had been used previously, it was to refer to what you saw as examples of the political violence in Colombia and Mexico, the assassination of mayors, political candidates, things like that you saw. And that, continues in those regions to the day, but we never really saw it as applying to the United States. And in terms of, narco trafficking, by and large, you had what was a legal framework based around both traditional and legal strictures of interception of boats on the sea, rules of Coast Guard interception, boarding, inspection. And those were all processes that were used rather than the destruction of boats without any kind of search for beforehand. Look, the administration, of course, is justifying that they have intelligence showing that there are narcotics or other contraband on these boats, and that there is intelligence that they, in fact, coming to the United States, and that is again, the justification they are doing so. Look, the facts are that the administration says they're justified in it. Congress is largely the body constitutionally and legally obligated to both oversee and authorize this. And thus far in the votes, it hasn't pushed back thus far on the administration's war powers claims, but at the same time, Congress hasn't authorized or allowed anything specifically for the administration to attack these boats, nor to escalate anything further with Venezuela.
Okay. So from yesterday's hearings that adjourned and both sides divided along party lines, what happens now? There was another boat blown up in the Pacific Ocean last night. They showed the video on morning television today. This is just going to continue, and is the attack today or overnight sending a message to, I guess, these narco terrorists and to the American people and to everybody
No,
else?
if we know anything about narco terrorists, they are simply looking, how do we get more of this in through the land in Mexico or on airplanes or other things like that. They will just simply change their tactics of delivery to the United States. So I don't think you're going to see a boat here, a boat there, causing a meaningful reduction. If the intelligence they claim is correct that this does have fentanyl on it, look, a small amount could cause significant harm to quite a few people, drug users, abusers, or innocent people even who come into contact with it. So these are dangerous substances, but at the same time, we are seeing a completely different way of dealing with it, and one that I don't think, when you think of the overall amounts that come into this country, as well as the long history of how these cartels have developed networks and know-how of getting contraband into the U.S., they'll shift their methods much more than see a meaningful reduction of what's coming into this country. I know it's a cynical take, but it's if you look at the history of the war on drugs, that's how it's worked.
Why are we doing this with Venezuela? I know I asked you last week. Any other additional thoughts you might have slept on? Any ponce d'escalier?
Well, look, the administration is also justifying this. They've had their rhetoric. They even had issued a press release, a statement saying that there is the Trump corollary to the Monroe Doctrine for Venezuela, as well as Cuba. Nicaragua is another one. Look, you've had these countries that have been sites where Russia, China, others, and particularly China, have had influence. China also has plenty of trade and commercial influence throughout the region. But Venezuela, Russia, there's a relationship there. There's a Venezuela-Iran relationship, Venezuela-China. So look, among the Latin American countries, Venezuela has done a lot more to align with our enemies. And frankly, it would be a statement, I think, in the administration's eyes, that it would be to Russia and to China. The U.S. can police its own backyard too. Because again, what is the difference then? The moral argument, if this is not underpinned by, again, the rule of law and the traditional procedures like we've had with, narco-terrorism other in the past. Or if there is a broader case for regime change, then lay it out for the American people and their Congress. Give us the intelligence, give us the rationale, lay out these links for us. The Congress can authorize military action or not.
Move to China for me, Dan, please.
No, I think it's what we've seen with China is since Xi and Trump met in South Korea, and that we've had this largely, I think, what we see as a détente. We see within the administration, and I've heard this is being done at a high level, that Stephen Miller is actually being asked to coordinate all China policy moving through the administration. A bit unusual that this wouldn't be, handled by the National Security Advisor, Marco Rubio, or someone on the economic staff. But this tells you, I think, that it's close to the president himself, that he has someone like Stephen Miller coordinating this, that frankly, they don't want any kind of actions or moves right now that would upset the Chinese. So no new sanctions on Chinese intelligence, because some of those were about to be put in place. Sanctions over Chinese hacking of the U.S. phone system. So those are on hold. A lot of this too was prompted by a report last week that Alibaba and other Chinese companies had ties to the Chinese military. The administration was frustrated, Trump himself, that news came out and that it might upset the trade negotiation. And I think analyzing this, you have to ask two questions. One, is this really the president trying to get a long-term deal, again, focused, solely on the trade deficit? That's how he values the relationship. Is he trying to keep that deal online and get a bigger deal of purchases, again, Boeings and soybeans and all those things that cut against the deficit? Or also, you can say more realistically, too, and I put more weight on this, the question of, is this détente really because we were pushed to a point of understanding truly how reliant we are on Chinese rare earths, those critical components, those critical minerals, and that right now we just don't have a alternative if we further escalated this into a tit for tat, cutting each other off. We don't have alternatives to China yet. So we need time and space in order to secure those alternatives, and therefore détente is the goal right now, because any other action further would be cutting off our nose to spite our face.
We cannot therefore pursue our political priorities because we have economic realities.
That's the bumper sticker version of it, Michael.
I'm your guy for bumper sticker, Dan. And see, I can carry the bumper sticker around in my head. I can't carry around in my head what you carry around in your head. Just can't. It's but within the limitations of my very limited head, it kind of works. I was anyway. Remember, Dan, I graduated in the top 90% of every class I was ever in. Don't forget that. I mean, don't forget, top 90% FAR.
Well, Michael, you get it though perfectly. There's a version of the political goals, the political statements, the even the security, the price of basing supply chains in your major geopolitical competitor. There are prices to that are now being paid in the unwinding of them, as well as the limitations on your freedom of action when you don't have an alternative.
Very well said. Dan Mahaffee is the president of the Dr. Scholl Foundation, our senior political analyst, and my great friend. Thank you, Dan. We're coming back with Josh Huminski. Stay with us.
Thanks for being with us this week. And now to introduce this week's special guest, it's your host, Michael Farr.
Welcome back to the FarrCast. I'm loving today. We start with Iuorio. We get through Mahaffee. Ladies and gentlemen, as promised, a FarrCast fan favorite. In recent years, a new one here in season 9. Josh Huminski is the Senior Vice President for National Security and Intelligence Programs, the Center for the Study of the Presidency and Congress. He manages the research of the Euro-Atlantic security and transatlantic relations, U.S.-Ukraine, and U.S.-Russia relations. Think this is an expert who might shed some insights on what's going on for us. Yeah, graduate degrees from the War Studies from King's College, London, dissertation on energy and international relations. He's a smart guy. And he went to UConn, which also makes him a smart guy because I did my graduate work at UConn. So, all right, there we go. Josh, welcome back.
Thanks so much for having me. It's great to be back.
We're very happy to have you back. Josh, I'm watching this so-called peace negotiation between the U.S. and Russia, and then the U.S. and, sort of Ukraine, and then the U.S. and Europe when Ukraine doesn't want to go along with what the U.S. says, and ultimatums and everything. And I'm not seeing anything happen other than continuing attacks by Russia into Ukraine. And I'm not hearing about any Ukrainian ongoing attacks that are moving back into Russia. We heard about that for a while. Am I still hearing the whole story in the media? And can you give us your best assessment?
Yeah, so there's a lot to unpack in there. What you've seen in the last 2 weeks is a bit of a flurry of diplomatic activity, both in Geneva and in Florida, with everyone from Secretary Rubio to Army Secretary Driscoll, Jared Kushner, Special Envoy Witkoff, a lot of activity, which started coming off of a 28-point plan that came out of Geneva and was a framework, if you will, of principles for potentially ending the conflict. They walked away from Geneva with that, and they came back to meet with the Ukrainian delegation. That got downsized to a 19-point plan. Special Envoy Witkoff and Jared Kushner were touring the Kremlin and then met with President Putin and walked away effectively with nothing from that meeting, although expectations were fairly low. Expectations should be low for this process as the starting point, because terminating any war is difficult, it is complex, it is a lengthy process. There's about almost 158 meetings, I believe, over 2 years to get to a Korean War armistice. And we are just in the early stages of trying to reach a ceasefire and an eventual peace deal in Ukraine. There are many, many moving pieces. I mean, you talked about the Ukrainian attacks. Ukraine still continues to retaliate against Russia. They have started striking the Shadow Fleet, which is a new development. The Shadow Fleet is the fleet by which Russia moves its oil to countries like India. That is sanctioned, but sort of outside the remit of many countries, but Ukraine is starting to target them, which is good. Ukraine has also impacted Russia's ability to process and refine hydrocarbons. About 38 to 40% of its oil refining capacity is down because of Ukrainian attacks. So there are a lot of moving pieces. I would characterize the negotiations as very early stages of a very early beginning of a process. We are very far from reaching a deal, but it is starting to move pieces in play and see what the art of the possible is right now.
Tell me, if we go back to your comment that there were 158 meetings to come up with the Korean War armistice, where are we in that timeline for this war?
I would say, at least in terms of the negotiation process, we're at phase one of probably a dozen phases right now. From Putin's perspective, he does not feel any material pressure to change the course of the war. They're losing 30,000 personnel a month. They're recruiting 30,000 personnel a month. He's being told by Gerasimov, the chief of the defense staff, that they are making progress on the battlefield, probably more than they actually are, because no one wants to tell the boss that they're not doing as well as they think they're doing. But they are making steady gains. Pokrovsk, which is the most recent territory that the Russians have taken at significant cost. But from the Russian perspective, they are making grinding, slow, expensive progress, but progress nonetheless. On the flip side, you're seeing President Zelensky having to deal with a significant corruption crisis and a scandal that saw his chief of staff, Andriy Yermak, dismissed, as well as a couple ministers being dismissed. So from Putin's perspective, things look good. You have a president that is interested in reaching his deal, but not desperate to reach a deal. You have Europe not playing a massively constructive role right now. They are committing to increasing defense spending, which is good, but they are being difficult about using Russian sovereign assets that are in Belgium and a few other locations to fund Ukrainian reconstruction. And the Europeans, in many ways, have also put some significant obstacles into negotiating and saying, we're not going to negotiate with Putin unless we can get a just and moral peace. So that is making things difficult. So if you're Putin, things look pretty good right now. I will be constructive and I will engage so to keep the president on my side, President Trump on my side, but I'm not going to give too much away because I don't really have to at this point.
So this is just going to go on and on and on. 30,000 troops a month. 30,000 troops a month?
Yeah, the casualty figures are incredible. So
that's not deaths; those are casualties.
Those are casualties, so it includes deaths and wounding. The Russians are continuing to have that replacement figure.
Where are they coming up with the 30,000 a month? They were pulling old men out of prison a year and a half ago.
They're still pulling folks out of prison. They're still recruiting from the impoverished parts of Russia. What is interesting to note is that the bonuses that they are offering for recruits are going up, so it's becoming more expensive. Some of the Russian states are also finding it difficult to pay out those death benefits and those bonuses because they're facing pressures on their own budgetary crisis, which means the federal state will have to step in and cover that off. So it is increasing, but this is in Russia's calculus sustainable. They've lost a million casualties, including about 250,000 deaths, which is just an incredible figure, but they still see that as making progress.
How many Americans were lost in Vietnam?
I believe it was about 58,000 were killed.
58,000. That's what I thought. And in this war for Russia, what's their death count?
I believe it's about 250,000.
And somehow that's acceptable if it at 250,000. Population of Russia is about 135 million, 140 million. Is that right?
I think something about that. We'd have to double check the figures.
Harry, double check that for us, would you please? It's somewhere around there, and I've always kept that in mind because it's about the same amount of single young men in China between the ages of 18 and 25, excess of the number of young women in China. So there are 125 million more young men in China, single young men in China, than there are young women in China. That's a lot of young men all dressed up with nowhere to go, you know? So anyway, that's the population of Russia. That's basically the population of Russia. So these are huge losses. Economically, Josh, how long can they sustain this? You know, my wonderful example and hero, Sister Irene Krauss, said, no margin, no mission. We've talked about that in terms of what Xi Jinping is doing in China and how he's moving away from capitalism and says, I'm not focusing on this, economically driven society. I'm just going to have a mission driven. And if you can't pay for it, it's really hard to do. Can they continue to pay for it? Their economy is not great.
The economy is not doing great, but we have consistently underestimated Russia's capacity to manage the financial aspect of this war. The expectation early on was that the sanctions package that was put on Russia was going to force them to the table. It didn't. The expectation was that the sanctions package—
Why didn't that work? It looked like it would work. It makes sense if you know you've got a fragile economy. You go put pressures on the economy. It's what Reagan did, right? He just outspent them and baited them into a spending spree, and that really got them more than anything else, right? Why didn't it work?
Well, the sanctions package in many ways first was incomplete. Only some of the Russian financial institutions were sanctioned. First off, there are a number of banks that remain having access to SWIFT. That's number one. Number two, the sanctions are a tool of political displeasure. It is a signal more than anything else. You're not going to be able to sanction your way out of a conflict. It's basically saying you're doing something we don't like, and here's our demonstration of it. We also underestimate the Russian capacity to manage the state economy, to adjust the way that it finances elements of production. And we've been hearing this probably since the outset of the war, that it's only a matter of time that the Russians won't be able to sustain this economic spending. I remember pretty much every trip I've been into London and having conversations with people saying, it's 6 months' time, it's a year's time, it's 18 months' time, and the Russian economy is going to collapse. Well, here we are 6 months, a year later, 18 months later, the Russian economy has not collapsed. The Russian state is very good, actually, surprisingly. The Russian central bank in particular is very good at managing the economy and papering over some of these difficulties and economic vulnerabilities. Now, how long will that last remains to be seen. The Russian state budget, I believe, it looks like it is, if I'm not mistaken, expecting the conflict to go for at least another 2 years and then potentially taper off is the way that the budget looks. But again, we'll have to see kind of what happens with the hydrocarbons revenue, other sources of revenue in terms of what exports they are having, but also what relationships they have with China and India. I'd be very wary of expecting a Russian economic collapse to precipitate an end to this war.
Okay. So this just goes on and on. Putin had said in one meeting that he was prepared to go to war with Europe. What was that about?
So yes, he basically said that he sees as Russia, or excuse me, he sees Europe as preparing for war, and if Europe wants war, then they will have war. It is basically Russia, or sorry, it's basically Putin on horseback without his shirt, being bluster, bloviating, and beating his chest. Is basically saying, on the one hand, I'm engaging with Witkoff and Kushner and looking like I want peace, and on the other hand, if you want to pick a fight, then I'm ready to fight. I think the one thing that does deter Russia and will continue to deter Russia for the foreseeable future is Article 5 of NATO. He looks at NATO today and doesn't want to pick that fight. If you are Russia and your conventional forces are bogged down in Ukraine at considerable cost, considerable expense, and you look across the frontier and you see Estonia, Latvia, and Lithuania, going to 5% of GDP in defense spending. The Poles are going to be doubling the size of their military. The Germans want to be the largest military in Europe. That's not necessarily a fight I want to pick. But if you're looking at it from an internal Russian perspective, you're saying, I'm reaching out with a hand to the United States and Ukraine to potentially reach a deal, but look constructive. I'm also going to be saying, look, if you want to fight, I'll fight. It is typical Putin bullying negotiating tactics, if you will.
How much capacity does Russia have to continue this war? Where do they keep finding these 30,000? Sooner or later, you run out of 30,000 a month, don't you?
That's the big question. And thus far, they've been able to cover that off. I think I mentioned earlier that they are increasing.
I got the thus far part, but tell me about the next. I mean, if I'm looking at 360,000 people, I did that math in my head, over the next 12 months. They got 360,000 people to throw at this still?
But they still appear to do so. I'm wary and reluctant to sit there and make forecasts or prognostications on what the casualty figures and the recruitment rates, because the Russians have continued to surprise us.
Politically in Russia, the society, the people in Russia have to be not happy about this. I mean, how much more fodder of their sons and daughters are going to get thrown at this?
I think the challenge here is looking at the way that the Russians understand the conflict and seeing the centrality of the importance of this war to the Russian identity, and also the way that President Putin and the political technologists around him have successfully insulated, particularly the elite in St. Petersburg and Moscow, from the consequences of this conflict. They are recruiting from the impoverished portions of the country, the far east, the central parts of Russia that do not have.
But how many more have they got left? I mean, and do the Russian people? Do the Russian people ever go up in arms, or are they all just so cowed and ready to be shot themselves that they're not going to stand up and say something against this guy?
Well, I think on the one hand, yes, the Russian state in particular has been very good about quashing dissent and controlling the narrative and preventing opposition from standing up. I mean, you saw what happened with Alexei Navalny and the death of him in the High North prison camp. But there's also a sense, too, we need to recognize that the Russian state and the Russian people, in many cases, support the narrative that President Putin is putting out, that this is a vital part of the Russian state. The part of Ukraine is Russian in their mind. So this is a conflict that they are, in many cases, supporting. And you're not going to see the kind of groundswelling of opposition. And it's a parallel, if you will, is, look, the United States was in Afghanistan and Iraq for 20 years. That was an incredibly costly, not the same level of cost, certainly, that Russia is experiencing. But the people, in many cases, were insulated from it. The amount of Americans who were serving in uniform were considerably smaller. The expense was insulated from the American people. We weren't asked to spend more in terms of taxes or pay more in taxes, excuse me. And we went at war for 20 years, effectively. The Russian state is much more insulated from any sort of opposition than the United States is. So it is very I would be very cautious, I should say, in making sort of parallels and expectations. Like, why aren't the Russian people, standing up for this? Why aren't they opposing this? The Russian people, in many cases, support this war. They're insulated from the conflict, and as such, it's going to continue. They're not going to see this kind of domestic opposition showing up.
I don't see, from my perspective, I've tried to put myself in the other guy's shoes. I'm trying to think about, I worked in the Soviet Union, and I helped them open stock markets, and I spent time there, and still have friends in Russia from those Soviet Union days. There is the same type of humanity, of course, around the world. When you sit down with your enemies and you talk to them, or you think they're your enemies, and you talk to them for a while, and they talk to you about their grandmothers and their grandchildren, and they're this and they're that, and they've got to make this for dinner, and you're all just kind of people talking at the end of the day. It's just hard for me to see some of those very loving families I got to know while I was there being okay with this sacrifice of life in exchange for territory in Ukraine that's not going to change my life at all for the notion of Mother Russia. It's just perhaps a bridge too far for far. Joshua Huminski, Senior Vice President for National Security and Intelligence Programs at the Center for the Study of the Presidency and Congress. Josh, thanks so much for being on the FarrCast.
Thanks so much for having me. I look forward to joining again soon.
We always learn so much. That's it, ladies and gentlemen, for another FarrCast as we cover Wall Street, Washington, and the world. As a final note today, I am coming to my end of the time at Farr Miller in Washington and Hightower. End of this month, end of this year. Harry and I are going to keep doing FarrCasts, but I will be stepping away from that company that I founded. And it has been a wonderful, wonderful career with wonderful, wonderful friends. And believe me, my phone's still on. My email will still work at mkf424@gmail. If not a Hightower or Farr Miller address, I look forward to staying in touch with all my dear friends for so many decades. It's an honor and a privilege to have been there, and I am deeply grateful to each of you. I'm deeply grateful to be with you each and every week here on the FarrCast as we cover Wall Street, Washington, and the world. For Harry Jennings, my producer, everybody at Hightower and Farr Miller in Washington, thanks for listening. We'll be back again next week in Naples, Florida. I'm Michael Farr.
We hope you've enjoyed this edition of the FarrCast. Thanks to Michael's guest, Jim Iuorio, Dan Mahaffee, and special guest, Joshua Huminski. FarrCast comes to you weekly and is produced by Michael Farr and Harry Jennings and is available for free on Apple Podcasts, Spotify, TuneIn, and all major podcast platforms. We love hearing from you every week, and we try to respond to all of your notes and comments. You can reach us at hjennings@farrmiller.com. Let us know any questions you have and topics you'd like to hear us cover in coming episodes. We would like to remind you that the FarrCast podcast is for informational purposes only and should not be considered legal or financial advice. The information, statements, comments, views, and opinions expressed and provided in this podcast, including by speakers who are not officers, employees, or agents of Farr Miller in Washington or Hightower Advisors, are not necessarily those of Farr Miller in Washington, Hightower Advisors, or any firm any of our guests may represent. Any mention of a specific security should not be construed as a recommendation to buy or sell, and please be aware that past performance is not a guide to the future performance of any security, index, fund, manager, or strategy. We strongly recommend you review with a financial professional before you make any investment decision. And if we can be of assistance at Farr Miller in Washington, please reach out to me at hjennings@farrmiller.com. We are here to help, and I'll be happy to put any of our listeners in touch with one of our investment professionals for a complimentary review of your portfolio and your investment goals. Take care, stay safe, and stay healthy. Join us next week when our scheduled special guest will be Jenny Harrington, sharing her year-end insights and what she's looking for in the new year. Go beyond the headlines each week with the FarrCast. Wall Street, Washington, and the world. Farr Miller in Washington is a group comprised of investment professionals registered with Hightower Advisors, LLC, an SEC-registered investment advisor. Some investment professionals may also be registered with Hightower Securities, LLC, member FINRA and SIPC. Advisory services are offered through Hightower Advisors. Securities are offered through Hightower Securities. All information referenced herein is from sources believed to be reliable. Farr Miller & Washington and Hightower Advisors LLC have not independently verified the accuracy or completeness of the information contained in this podcast. Farr Miller & Washington and Hightower Advisors LLC, nor any of its affiliates, make no representations or warranties, expressed or implied, as to the accuracy or completeness of the information or for statements or errors or omissions, or results obtained from the use of this information. Farr Miller & Washington and Hightower Advisors or any of its affiliates assume no liability for any action made or taken in reliance on or relating in any way to the information. This podcast and the materials contained herein were created for informational purposes only. The opinions expressed are solely those of the authors and do not represent those of Hightower Advisors LLC or any of its affiliates. Farr Miller & Washington and Hightower Advisors LLC and any of its affiliates do not provide tax or legal advice. This material was not intended or written to be used or presented to any entity as tax or legal advice. Clients are urged to consult their tax and/or legal advisor for related questions.